Folks, it's November 6th. The market's going to be wrapping up real soon. The session was slightly bearish. Let me talk to you about all the threats, all the opportunities, all the potential plays, and tell you what you should be looking at. Let's head into the labs and get into it right now. Hey gang, markets are going to be closing in in less than an hour, in about 45, 50 minutes, and I wanted to give you a little update to kind of tell you what I'm seeing. Now, this is the second day we've tried to hit all-time highs on the Dow, and we haven't done it. We've been unsuccessful, and also we're reaching overbought territory. That means we're expecting. Now, let me explain to you why I'm talking about the Dow. Usually I speak about the SPY, the S&P 500, but it looks like the Dow's now overbought too, and the S&P has been overbought now for about 3 days. It looks like it's going to be coming down to the 50-day moving average. Now, why am I explaining this to you? When the S&P comes down, you don't want to be in assets that are correlated to the overall market, because unless you're trading tiny stocks, no matter what's in the S&P, it's going to move down, which means for the next few days, maybe a week or two, you may want to start trading alternate assets, bonds, gold, interest rates, global currencies. There's a statistic inverse correlation between assets like bonds and gold versus stock market. What does that mean? That means when the S&P starts coming down, gold and bonds begin to rally. And right now, if you look at the bonds market via TLT, it looks like it's ready to move higher. It is oversold. It's coming off oversold territory, and it's at support, and it looks like it's going to head higher. Let me show you another one that's just so you could see it a little clearer. This one seems to be marked up from our analysis session earlier. The EDV tracks bonds. Notice here, this is the second bottom, and it looks to be between the 50 and the 200-day line. I call this the twilight zone, but it looks like it's going to start coming up, and the stock market is overbought. Also, let me show you something really, really interesting. Take a look at volatility. I want to show you something. When volatility goes down, that means stocks go up. When stocks go down, volatility goes up. Take a look at the 2-year chart of volatility. We're literally at a 2-year low right now, and we're coming off oversold territory. So it looks to me like volatility is going to go up, and that means the large cap stocks are going to start moving lower. And again, am I expecting a bear market? No. Am I expecting a big downside move? No. I'm expecting a soft landing that may last a few weeks, and I'm telling you that because it may be a good opportunity to get into assets that have an inverse correlation to the stock market, like currencies, interest rates, bonds, golds, and so forth. Historically, those assets rise when large caps come down. And keep in mind, this RSI, this indicator you're looking at, it's not very sensitive. There's a lot of oscillators that are really sensitive, like stochastics, MACD. If you look at the RSI, this is over a period of 6 months, I believe. Yeah, 6 months. It's hit overbought levels right here, oversold levels right here, overbought levels right here, and again, oversold levels right here, and overbought levels right here. I've been saying overbought, oversold, overbought, oversold, overbought so long, I mix them up now. Because I trade long, short, it doesn't make any difference to me. So when I say overbought or oversold, I have to think twice. So again, the markets are in overbought, and the 10-day RSI is very sensitive. Now, I'm not expecting a major crash. I'm not expecting anything like that. 74% of earnings this season have outperformed expectations. Now, expectations have been beaten down, but nonetheless, they've been beating them. So things are looking better than expected. GDP is growing substantially. Just a soft landing, giving you opportunities to make money from uncorrelated assets or negatively correlated assets. I hope that helps. Folks, now's the perfect time to protect your portfolio by adding a hedge and securities that are totally, completely uncorrelated to the market and your portfolio. Think of it as an insurance that you buy before a catastrophe hits. That's why I recently created a strategy. Now, this strategy, it's designed to generate consistent gains regardless of what the market is doing. And it's worth learning about. It's delivered a 3,845% return since 2012. The strategy trades currencies and gold, but don't let that discourage you. I promise it's not complicated, and you can use your regular stockbroker account. There's nothing new to learn. Click the link below to get all the details of this strategy. Do it now. Don't regret it. Talk soon.